In terms of, though, today's sell-off, but also, meanwhile, we should say there are some stay-at-home stocks, and you can see them, Peloton, Zoom, and the like, that are moving much higher. Does that make sense to you?
In the very short term, I understand why they're a little bit higher. Clearly, a company like Amazon, we appreciate the importance of e-commerce, and it has become even more important. I think what is key for us is that if we look at the advancement with the scientific, the healthcare community, clearly the technology community, that is helping us to find a way out of this the pandemic. And so while spikes and variants are going to be part of the dynamic, really the social fabric, everything around us for the foreseeable future, we still see opportunity. It's driven by innovation, it's driven by investment, and it's driven by companies that are looking out beyond some of this. And
right.
if those companies could do that, there's shareholder value to be created.
In terms of pricing, though, one of the big other questions is what Jay Powell is going to do come 2022, and potentially, if you are concerned about this new variant, how that might impact that.
There's clearly a little bit more inflation. We would expect interest rates to move higher over time. If things got a lot worse, could the Fed push back the timeline? That's certainly possible. I think what will matter for a lot of these companies, even were interest rates to be on the 10% to be 2.5% or 3% or even 4%, I still think, Andrew, it's going to come down to the innovation, because historically these interest rates are still very, very low. But what we're seeing is that the tools, the shift to the cloud, mobile, this build out of the digital infrastructure, that will be very, very strong in the next 5 or 10 years. I think that will matter more than the level of interest rates and perhaps a shift on the taper timeline or not.